Let's get a technician's take on this 3-month stall out. Joining us now is Fairlead Strategies founder and managing partner, Katie Stockton. Katie, good to see you. So this flattening out period after a very strong run, what's your read on it? Obviously, plenty going on, below the surface of that index.
Yeah, I really think it's all about the tech sector. So since late October, we have seen underperformance from large cap technology. And of course, that's yielded a loss of intermediate term momentum behind the S&P 500. So I do think that it shows the strength or the impact of technology behind the market and what was a very strong uptrend really up until that October peak. The loss of intermediate term momentum, I would argue, has been weathered really very well. I mean, we've even seen higher lows since that November low. So it hasn't been dramatic downside, really more just a consolidation phase. We're very close to all-time highs, in fact, for the major indices. But it is certainly a change in character of the market. So it shows how important these large cap tech names are to the upside.
For sure. And what's your call on whether, in fact, they will resume any kind of leadership? There was a little bit of a hint of that today. We've seen a couple of these phases in the last couple of years where, for a while, let's say the NASDAQ 100 will underperform the equal weight S&P by, even 20 percentage points and then rebound.
Right. I think it is a corrective phase that should at least culminate in an oversold bounce. We already saw that in the last couple of days from the mega caps. The mega cap complex is starting to report earnings next week. And as you probably well know, they're largely oversold coming into these earnings reports. Apple came down to that 243 support level. If Melissa is listening, we had talked about that before. Meta came down to some support based on the cloud model that was quite important and has gapped off of that support. And even Microsoft today is showing signs of life after holding around 450. So these are key support levels and oversold indications that we have near them. So I do think that we could at least narrowly to the mega caps see a brief phase of outperformance or a recovery rally in relative terms that could perhaps get the major indices out of this consolidation phase, but perhaps also maybe just temporarily, because the loss of intermediate term momentum has led to downticks in our monthly gauges that tell us that Q1 will probably see a significant correction. So we have a hint of that from our longer term gauges. And with that in mind, we're going to continue to watch support levels as risk metrics, and that for the S&P, we're watching about 6720. And for the NASDAQ 100 index, we continue to watch about 25,000. Those levels are both based on our cloud model on a short-term basis. And honestly, they're not very strong support levels. So if we come at them with downside momentum, perhaps on the back of this relief rally that we're expecting, that could be problematic, meaning indicative of a significant corrective phase.
So even if temporarily mega cap tech comes back and has a bounce, Katie, does that mean necessarily that the things that had benefited from tech's sort of malaise will fall? I mean, financials, small caps, what does it mean for that broadening out trade?
It's a really good question, because we do in the Russell 2000 index have some signs of short-term upside exhaustion. I think it's a great example of where the relative performance has come from year to date, and that includes selected areas within financials as well. So I think that would be a natural thing to see, at least consolidation perhaps, as the focus turns back to tech and back to the mega caps. Let those financials that have run up and the small caps that have run up digest their gains in either a consolidation phase or a pullback. And then perhaps that becomes the start of an opportunity to add exposure, because we do think the rotations that we've seen year to date are pretty meaningful. The Russell versus the S&P 500 has reversed a downtrend line in the ratio going back to early 2023. And it suggests that the phase of outperformance that we've seen that really began back in August is meaningful, and in 2026 could be more of a year that favors small caps.